Bitcoin has seen a massive rejection from point B of our harmonic pattern. This is the exact harmonic that I was sharing in my very last YouTube video with you all, while I was expecting continuation to the upside, monitoring the order flow live in the time through that $100,000 breakout. And while I was explaining I am bullish, not shorting yet, and expecting further rise to the upside to hit, of course, that harmonic target. And you can see how that played out with hitting that for a big move to the downside. Well, there's a lot to explain in this video. It's not that simple. Let's just say that. So I'm going to be explaining more of the inner components of this move, some just truly very important information. I truly believe I can help you massively with this video. I just need you to pay close attention to the information that I am sharing. With that said, I hope that you enjoyed this video. I will give a quick summary of the point B here, and whether we're looking at the overall bearish harmonic that we have going on here, or whether this is in fact not a X, A, B, C, D for the rise to come of D, and we're actually looking at a bigger Elliott wave A, B, C to the downside, heading down towards, $87,000, $85,000. That is what we will be looking at in this video. Starting off though with the summary of what went on here with B, because it's truly, you can learn a lot if you listen carefully here. So we actually had a wonderful, wonderful time in that last video, because it happened. As I was making that video, we saw this very candle. We were making the video right on this candle here, breaking out through $100,000. And that was wonderful, because you can see in real time what I teach. And that is the most important thing to look at upon getting a big break of a significant level here, $100,000 psychological. Look at the order flow. Okay, I cannot stress how important that is. And through looking at the order flow live in the time on this candle, it is what aided me to not short early. Okay, if you had shorted any of this section, you would have lost and missed the short trade at the top of the CC. Okay, and it is through the reading of the order flow here live in the time that I made the informed decision that this is a good, healthy breakout. And this is where it's so important to understand time frames. Here on a very low term time frame, live in the action as we're just breaking above $100,000. On this very candle, I'm saying this is a bullish, healthy breakout. I am not shorting Bitcoin here at above around $100,000. There's not a short trade to be had. Why? Because the order flow is very bullish. We're looking for higher continuation. And this is where you need to take, understanding that this does not mean I think we are going to new all-time highs. I'm not bullish thinking, well, that means we're only going to go up. I am bullish understanding that the 102,000 harmonic target is likely to be hit. So I am not shorting here, but I will be looking for those shorts at the top of the CC, which is where we had then actually a lower term time frame trade setup with a swing failure pattern occur, giving you the very best trade entry setup that we trade at Chart Champions. So I hope that you can understand that. I know for beginners, intermediates, it's a little bit difficult. And I can see that also with some of the comments, this guy saying, I am confused. Your last video, you said you were bullish. And I agree. I was bullish at this section of the chart at to be precise, 100,694, that exact price point. I was saying, yeah, this is healthy bullish breakout. But as people that understand and can reply here, this guy Fearless has a very good point. This is someone that truly understands what we teach. It did go up from that point, right? We went up another over $2,000 to the upside. When I was making that video, price just broke out with strong volume in delta, and it's made its way to the top of the target, which was the top of the CC, and this is where some people can get confused. Daniel, you were bullish in your last video. Yes, I was bullish on the breakout using the order flow, but I still had my strong target, as recognized, at the top of the CC with this exact harmonic, where we were looking for the continuation rise before a move straight back down. That's why it's so important to understand time framing. Okay, and right now I am actually remaining more bearishly in the sense that I do think lower prices are going to be coming here on Bitcoin. So it's just very important that you understand that. So with that said, I want to explain a little bit more of what went on here. So we had the bullish order flow, and that continuation happened. We got another $2,000 to the upside, and we put our first high in at around, what would be 2 hours later. But this is not given an actionable trade setup here. At this point, this is not really an actionable trade setup. Yeah, you've come into the CC, but I would not say you have any entry trigger off of this point. Where did you get that entry trigger? Well, my friends, this is what I class as the number one setup. It is a swing failure pattern off of the top of the CC. Okay, so our top of the CC here, we have an SFP of the high. So we had that range high, we put in a low. We come back up to that mini range high with a swing failure pattern, which is your actionable short trade. On top of that swing failure pattern happened at the top of the CC. So let me zoom out here and show you once again. You can see here the Fibonacci from high to low. That's how we get this CC Fibonacci, the exact CC Fibonacci that we were looking at there. You can see around $102,600 to be precise. Okay, that is the harmonic CC target. And that is where on the lower term time frame you had the actionable short trade setup with a swing failure pattern. Again, you would have to have been awake. You'd have had to have been at your computer at this time. If you're asleep or you're not trading for whatever, then you, of course, would miss that trade. But if you're at your computer, if you're trading, that is the number one trade setup that we have ever taught at Chart Champions, right? It's a wonderful trade setup. It's a very high probability. Again, you can trade this for a take profit one at the low of the range, and then you would be in a scenario where you can have hit take profit one, and then you got the rest, the majority of the trades still running now for even more profits. Okay, so that was how we come across the order flow, bullish locally, looking for continuation to the upside. We got that continuation to the upside to the top of our CC Fibonacci, where we had the rejection. The harmonic is powerful, and we come all the way back down. So I hope that you understand that. And of course, when we were still trading above 100K at this point, we had then seen the swing failure pattern at a range high, no fake out of the range low. So there was nothing bullish here at all. And for me, it's obvious, very high probability of a drop below $100,000. The harmonic, of course, being the highest probability, highest likelihood at this point in time. We got to be looking for this continuation to the downside at this point off of the swing failure pattern. We had broke down from the mini range low, no sort of fake out, and we've got to be looking for a much bigger move to the downside, heading down towards $95,000, right? That's where we would be looking for point C of the harmonic. So I hope that has all made sense thus far. Okay, there's nothing confusing, too much about this. I would say this is the last heads up that we had. What goes up very fast can go down just as fast. Okay, so this is from the daily morning update that I actually had yesterday, where I was explaining to the champions, this is a very big inefficiency. If we get the acceptance below the range, look for a very big move to the downside. And of course, as you got that acceptance below the range, we were looking once again for a very big move to the downside. And that's then where the last update that I gave last night was, at the moment, I'm just waiting for the bigger drop on Bitcoin, not going to be taking any early longs, nothing to do here other than waiting for a bigger drop to come. And I did, of course, emphasize that for you all for free over on Twitter, or X, however you want to call it too. And just for the last final shout out before we move on here, of course, Severin also done a video yesterday where he was much more bearishly biased and caught the exact top of the Ethereum short trade. So yeah, I hope that you enjoyed that, people, members as well, making profits off of that. So yeah, shout out to Severin with the epic call there for the Ethereum short. And so yeah, don't be just watching my videos, make sure you're checking into Severin's too. If you actually go onto the channel, you go onto the videos, you will have seen Severin yesterday with that short trade setup there on Ethereum. And by the way, he's also been doing the beginners series, which has been absolutely excellent. So I hope that you're enjoying that one too. With that said, we're going to move on to what we're looking at next. So we have actually now come down to what would be a bigger target of the harmonic that we have going on here, but there's a little bit of a caveat. So of course, the harmonic, if I just hide everything else a second, is really simply we had the high and we put in the low. And then the target for the B here is the CC Fibonacci. So from high to low, and you saw how beautiful that rejection was. And then you go from low to high, and you have another CC target. So we take our Fibonacci, we go from that low to this high, and you can see we're actually in the target zone right now of the harmonic, but this is not taking into consideration the symmetry and Fibonacci time. I do believe this is an early pivot, okay, because you can see here when I put on the harmonic using the pivot that we've put in today, the symmetry is very bad. Technically, have we hit some support here? Yes, right? We hit the weekly naked point of control. We've taken, the low of the CC. Just as here, you wicked through the high, you've now wicked through the low here. So technically, it's a nice pivot when you think about the weekly naked point of control there. But we can say in terms of the harmonic and the time, it is a bit too early. So what I would say with this is just pay attention to a few things here. Of course, we can look for the bounce here, and we're getting a bounce right now. But what I would be aware of is a lower high into a new low. Okay, of course, you can get your long trades here, and if you get a full-blown reversal straight up, well, you can take profit one, let the rest run, just like you would have on the short. Take profit one at the range low, let the rest run. If you took a long here, take profit one at resistance, let the rest run. Okay, if it doesn't come down for a new low, well, you hold on to the rest of your long trade. But I would be aware of the rally into another low, because then we got the symmetry. Okay, and I do think symmetry is important when it comes to these harmonics. So I think this is not technically valid for a harmonic in terms of the Fibonacci time, and that's why I think we can get the rally for a new low, or for the point C before the rise for D. And of course, I will actually say this, which is very important. Can we have put in the low now? Of course we can, my friends. We have hit the weekly naked point of control. We've taken out the low of the CC. And this is for the harmonic for a rise to point D. If we are, though, to see a lower high here and a new low made, yes, we can be looking for that C. But there's one thing very important that you should be aware of, and that is if we're in for a bigger ABC correction in terms of the Elliott waves. And then we can actually be looking for that bigger A, B, C, which is going to bring us down towards 80, but I would say between $84,000 and $87,000 for a much bigger A, B, C. So that's something to be aware of if we do not get the pivots put in around $92,000 to $93,000 and we move up for the harmonic. We are going to be looking for a further decrease in price to around, as I just said, $84,000 to $87,000 to complete a bigger A, B, C. So that would be a, viewed more of a zigzag type pattern for a bigger retracement to the downside. So of course, as a trader, and I need you to pay attention to this, you can see I truly approach this in a professional manner. I'm not getting, super bullish up at highs. I'm not getting super bearish down at lows. I'm simply just approaching the charts in a way of looking for high probability trades. So when I'm searching, for example, offered a harmonic that I was looking for, and we just try and find out a second, when we're looking for the harmonic validation above the 886. But anyway, you can understand that we got different pivots where we can be looking for the harmonic. So you have to understand it comes down to highest probabilities, because even with a harmonic, as I was showing you in this video, we can have a few different locations where it can be put in. We can be looking for the swing failure pattern of the 19th of December. Could have moved up to the $104,000 weekly that we had. It could have front run the CC. So what are you waiting for? How do you understand when to take the trade? Or when, as I said, you get an actionable short trade. You're not just going to randomly short at random pivots on the chart. Okay, again, you could have rejected here, but that would have been a short trade that the majority of people that follow my teachings would have missed. Why? Because at this point, you have no actionable short trade. So if you had just fallen down there, we would have missed that short. Honestly. Why? Because you didn't get the actionable short, and that's where it happens here. That is a short trade that everybody that follows my teachings would take, because that is a swing failure pattern onto the top of the CC. That is a very actionable short trade. So where I'm going with this is, as a trader, I am prepared for all scenarios. And a lot of beginners will, sometimes even mock me for this. This guy says price can go up, down, or sideways. This guy's prepared for a short above us and he's prepared for a long below us. Why don't you just tell us one thing? We want to know exactly what's happening. Well, I'm a professional. What I do, I take very seriously, and I am dedicated to helping you. I give my honest feedback and my honest views of the charts. And, I'm not here as a know-it-all, right? I am just here as a a guy that enjoys trading and I want to share and help. And by doing that, of course, I will provide you with different scenarios. Why? Because myself, even if I was not doing YouTube videos, I would have a bullish and a bearish scenario. I understand there is not one scenario that is always going to work out. So we need to be prepared. Again, I will only look for shorts on rises and I will only look for longs on drops. What that means is when price drops, I am, looking for longs and more bullish, you could say, in essence, right? I'm never going to be looking to short at the lows and I'm never going to look to long at the rises. So even, anyway, I don't want to make this video too long, so I'm going to briefly go through it. But yeah, essentially when price rises, I look for shorts. When price drops, I look for longs, okay? Finn. Overall, I just wanted to say the importance of having a few different scenarios, a few different plans. Then when one plan gets invalidated, you have your backup plan to go straight to. And when it comes to understanding, are we in here a bigger ABC or the Harmonic? We do not know. All we can know is we know where we can look for a long trade next. And if that long trade plays out perfect, we get a nice winning trade. If we get invalidated and price drops, well, we can scratch off that Harmonic. It's fine, no longer valid. Let's move on to the Elliott Wave ABC pattern, right? And that is the key to becoming a successful, consistent trader. Not having an ego, not having the need to always be right, except you can be wrong. It's fine. It's part of the game. It's a game of probabilities. We'll always say this is not a gamble. I'm not gambling. I trade with high probabilities. I win far more trades than I lose. So again, some people could say, well, you're gambling, it's a game of probabilities, and I agree, it is a game of probabilities, but I am the casino and I have those probabilities in my favor. So that's the way that I view it anyway, and that's how we can consistently outbeat the market, because we are very patient and, well, we know what we're doing when it comes to this game. So I hope you've enjoyed this video. I hope that you enjoyed that call off of the Harmonic. It was very nice. We put in the high at the top of the CC and we've made our way down to our first point. But again, I would say this pivot is too early. If you want more from myself, Igor Severin, the coaches at Chart Champions, then you can come over and make use of the whole of the content that we have via chartchampions.com. That's daily live streams, live trading streams. We have on top of that the whole educational library from start to finish if you want to learn about those good old Elliott waves. Well, if you enjoyed, you know what to do. Hit that like button, leave a comment down below. And if you want more from us every single day, chartchampions.com. We will help you everything that you need to learn to trade. And you can follow along with the updates inside of the Discord too. Hope you've enjoyed. Thank you ever so much. And that's me signing out. Thank you and goodbye.